Bro, you could be costing us a lot of money, man. You need to get on with it.
The thing is, I use my phone. I don't really use the web version. All right, bro. Today I'm going to teach you how to be a trader in 30 minutes time. That's the aim.
Let's go. I'm ready.
Okay. First thing is you need to open up a Trading 212 account.
First thing, bro, you need to sort your voice. Clear your voice, bro. You're smoking too much.
Yeah, that's true. Smoking what? All right, so Trading 212 account, that's the easiest to use. There is other things like IG trading and stuff like that, but it's a bit more complicated. If you're starting off like I did, you want to do CFD trading and Trading 212. Okay. Now, to practice, you open up a practice account, demo account. So we'll be using this today. It's not real money. So you've got £10,000 in your account. Okay. I'm going to talk you through exactly all the key elements you need to become a trader in 30 minutes.
Nice.
So when you open it up, you'll come to this. You can see you've got £10,000. It's a practice account, CFD. Now, CFD means contracts for difference. So basically, you're not really buying a share of the company. It's like you're buying a share. So for example, let's say you bought one share of Apple, $192. Okay. And it went to $200. How much have you made?
$8.
All right, good. Okay, CFDs work in the same way. You buy one share of Apple, it goes up to $200. You made $8 profit if you sold at that point.
Okay.
However, the key thing is on something called leverage. Okay. Now, if I open up the Apple stock, so this is what we call the chart. Okay. Normally, I prefer using the candlesticks, and this is 5 minutes. If you're starting out, I would say do 1 hour or 4 hours or maybe even 1 day.
What do you mean? What is this timeline?
So you can, this shows that each candlestick shows here every 5 minutes. So that candlestick there, that's a 5 minute.
So how the trades are fluctuating every 5 minutes?
Yes, yeah. So you can see here, if we zoom in a little bit more.
5 minute intervals?
Yeah, 5 minute intervals.
Okay.
So if we change it to 1 hour, can you see how it changes? So each bar represents here 1 hour. And obviously the price is on your right hand side. Down here is the volume, but that's irrelevant for now. Okay?
Volume in what sense?
Volume is how much of that stock is being traded.
Right, okay.
All right. Now, with CFDs, the key thing is here, your leverage. It's a 1-to-5 ratio. Okay?
Meaning?
Let's say you bought one share of Apple. Okay? You need $192, don't you, to buy it?
Yeah.
Okay? Now, if it goes up to $200 and you sell it, you made $8.
Yeah.
Okay? Let's say if it was a 1-to-10 ratio. What that would mean is you can buy 10 shares of Apple for the price of one share. Because if you buy 10 shares of Apple, you're going to need £1,920 or dollars.
Yeah.
But you don't have that.
Yeah.
Okay? But when you do it on leverage, you can play with 10 shares of Apple, but with the value of one share.
Okay.
Okay? It's different to buying stocks. Buying stocks, to buy 10 shares of Apple, you need to put in $1,920. Whereas on leverage, what you're doing is basically, if it's a 1-to-10 ratio, you're buying 10 shares of Apple for the price of one.
Okay.
And you're playing with that.
So it's better to have a bigger ratio.
Yeah. So the reason is if you put $192 in and it goes up by $8 and it goes to $200, you made $80 profit. Whereas if you buy one share, you've only made $8 profit.
Okay. Okay.
Does that make sense?
Yeah. So the better leverage is if it's a bigger ratio.
Yes.
If it's a 1-to-20 ratio, even better.
Yes. Well, no. So you want it. If it's 1-to-20, then you need 20% you're acting on. 1-to-10, 10%. 1-to-100 is even bigger. So the lower the percentage, the better it is, or the higher the ratio.
Okay. All right.
So if it's 1-to-100, you're basically you only need to put up 1% of the value.
Right.
So if Apple was 1 to 100, we only need to put in for $192, we're going to get 100 shares to play with.
Okay.
So if it goes up to $200, you made $800 this time.
Right. Okay.
Okay?
Okay.
All right. That's, as I said, that's the nitty gritty. And what I'll do, I'll link in a video that I've explained CFD trading and margin trading. But that we'll look at later on. The next thing is what you're going to trade. So, for example, do you have any interest?
I like the renewable side of stuff.
Okay.
I think renewables is something that's already not even up and coming, already in the flow of what people are doing. And I think I'd like to, it's something I'm passionate about things being renewable, people switching to renewables. I think if there's anything like electric stuff, hybrid stuff, renewable energies, that's something I'd have an interest in.
Okay, good. So that will come to later. When you're trading, you want to do something with high liquidity. What it means is markets that move a lot. So, I don't know, renewable stock, let's go for, can you think of something that's renewable?
I don't know.
Let's just put it in. Okay, I know one that I'm actually invested in. Solar. Okay, first solar. They make solar panels in the US.
Right, okay.
Now, the issue you're going to have is this, especially if you're starting off as a trader. Let's go to the candlestick. All right, can you see over the last, well, let's do it by day. Over the last few weeks, it doesn't really move much. Okay, this is one day. So it moves, for that day, it's only moved a couple of dollars per day. You want something that moves a lot. So the key ones people go, currencies, tend to move a bit, but you need a lot of money for that. When it comes to stocks, you want to do things like oil trading. So if we compare this to oil and have a look at oil, you'll see how it fluctuates. Whereas this, if we go back to the 1 hour time frame, I mean, it's not too bad. It moves a fair amount, but...
So what's the wisdom behind it moving? I would have thought if it doesn't move a lot, it's a bit more stable, so you can kind of be more certain.
It is, but you want something to move like 5-6% in a day, because you can make more money, whereas something that moves 1% in a day, you're not making much.
All right, yeah, I see that.
Does that make sense?
Yeah, I see. Okay. High risk, high reward kind of thing.
Yeah.
I see.
So if we put in oil...
Is oil one of those then that fluctuates? I imagine it would be.
Yeah, it fluctuates a lot. So let's open up this. All right.
So just on that, when you search for it, again being a beginner, there were so many different ones for oil.
Yeah, there's loads.
So when you decide, let's say you like oil, you're into oil, you think that's going to be a good investment. What you gauging when you decide, this is the particular one I'm going to go with? Because there's plenty of different ones you can
There
choose
is.
from.
I mean, as a beginner, because you want to practice and get used to trading, you want something that's volatile. And the big traders, they do something that's volatile as well, because that's where you're going to make the most money. Because you're not going to be playing with 100,000, £1 million, are you?
I suppose. Yeah.
So if you're playing with, £500, £1,000, you want something that moves up and down quite a lot in a day.
Yeah.
Okay. If you want to become a day trader and make a lot of money that way.
Yeah, I suppose. You're not using, not with big budgets, are you?
Yeah, exactly.
So I guess it's good to play around with this stuff when you've got, not that much invested in it.
Yeah.
Because even if it does fluctuate up and down that much, it's not killing you, is it?
Yeah, it's not killing you. So here, it's moved just in today 1.72%, and in the week 3.6%. And things that are very volatile, you get more leverage. Can you see that's 1 to 10?
Right. Yeah.
Yeah.
Okay.
Whereas Apple stock that we looked at was 1 to 5.
Yeah. Okay.
So the bigger that second ratio is, the better it is.
Right. So when you just said that percent, 1.72, like, is that for a beginner? Is that good?
Yeah, that's decent. I mean, initially oil has sort of stabilized a little bit. So if we look at something called the US Dow, the US Dow is the top 30 companies.
Dow Jones.
Yeah, I think they call it Dow Jones. Okay, let's do it this way. So you can do it this way. Indices, US, there we go. They call it US 30. Sometimes they call it different things, but this is the top 30 companies in the US. Okay, so again, this hasn't moved too much, but So today is 0.34%. In the week, it's moved 1.2%. But again, you're going to get good leverage on this. So this is 1 to 20.
Oh, okay.
So even better.
Not bad.
So the more volatile something is, the more liquid it is, the better leverage you're going to get.
So I'm seeing there the buy price is and sell price. If we're looking at 34,000. So when you're trading, obviously you're buying fractions of this, aren't you?
Yes, you are, because obviously one of them will cost 34,000, but obviously because you're trading on leverage, that's how you do it. So let's do this then. We can trade this. So let's open up the chart. Okay, let's go to 5 minutes. And remember, you got £10,000. Okay, So do you think? Okay, actually, let's do one better. Let's go to 1 minute. So do you think it's going to go up and down?
I can see, all right, the way that looks right now, it looks like it's coming down.
Okay, so we have an option to either buy or sell. So if we go to start trading, 30. Now, with £10,000, you can buy 3.2, and that's going to cost you £4,000 of your account.
So what's the
and remember, one share is 34,000. So this is how leverage helps you.
Right.
So let's do one. So remember, one share you're putting down £1,332, whereas in real life that would have cost you $32,000 to buy one.
Right. Okay.
Okay. So you're going for buy, yeah?
Yep.
Okay. Confirm buy. So now you've bought it, and can you see you're in a slight loss of £2.82 because
shit, man, fuck.
Because
first time trading. My confidence is taking a hit, bro. Cancel.
because what it is, there's something called the spread. So if we were to do that again, so US 30. Now, can you see there's a slight difference to them the buy and the sell?
Okay, yeah.
Okay, that is what we call the spread. So that difference of what is it? What, 2, 3, 4, 5, 6 something dollars, whatever it is.
Yeah.
That's called the spread, and that's the profit that the broker makes. That's how they make the money, because every time you trade, that difference is what they take.
Right. Okay.
Now, if you think it's going to go down, then we can go on sell and obviously put in how much. So let's see how we're doing. So can you see that little line there? So that's your break-even line.
Right.
All right, we're in profit. So if you want to sell...
Yeah, quick, Bob. Let's sell. Let's get out.
All right, chill out. 31p, yeah? So look, confirm you made... Oh, you actually made £1. £1.08. It went up quite... So that was in what, 2 minutes?
Okay.
You made £1.
All right. Okay, that's all right.
Yeah, it's good, isn't it? So now, if you think do you think it's gonna keep on going more higher?
I'm gonna gamble on it, and it looks like it's going on its way up.
You sure? Yeah. So you think it's gonna keep on going up?
Well, what I'm basing on is because I'm seeing up and downs, and I'm seeing some.
It's 50-50, innit? So if you're looking at it and thinking it's gonna go up, and remember this is a 1 minute time frame, so every little bar is 1 minute. Now, what you can do, start looking at the longer time frame.
Yeah, I think that'd be more
this
useful.
5 minutes.
Yeah,
okay. And then if you go to an hour, that's 1 hour.
Right.
Okay. So, what are we saying?
I think buy.
Okay, buy. So, start trading. US 30. All right. Should we put a bit more money to it?
Yeah,
should we put in 5?
Fucking let's do it, bro.
But you can only use 75% of your account, so you can't use all 10 grand. It'll only be up to 75%. All right, confirm buy.
Let's do it.
All right, so we're already in a loss of £16, and that's the spread.
Sorry, bro. We'll ride the wave. It's all right.
And okay, let's see what happens.
Wouldn't it be more useful though to see on a longer scale rather than the minutes?
Okay, good question. So that depends on the type of trader you want to be. So what we're doing now, trading every minute, that is what you call like a scalper or a day trader.
Right.
So they'll put in a couple of trades and see how much money they can make.
Yeah, because truthfully, if you can't, how are you meant to physically man it if you're going to do it every minute and you're looking at different things?
Well, this is how I started off scalping. I used to do oil. So it gets a bit addictive, to be honest. So you're watching it every minute. You're like, shit, I'm down 32 pounds. And we can see here, now you're down 34 pounds. And this is in a couple of minutes. So it depends on what trader you want to be. So while we wait to see what happens with that, you can trade by the minute, you can trade by an hour. So if I was looking at this, it looks like it's going to break out of this point here. So it's broken out there, and it may potentially keep on going further. Okay, if we leave it for maybe an hour or two and see what happens.
So what are you basing that on? Is it the trends in the
yeah. There's a couple of things we can use. So there's what we call indicators, and the indicators are here. Now, the common indicator that people use, sorry, the indicators are there. These are the most popular ones. So relative strength index is a nice one. I'll quickly explain how that works. So can you see something's come up at the bottom here?
Oh, yeah.
So what this shows is basically when the red line gets below this line here, you see this bit?
Yeah.
So that is when you should be buying. And look what happened on the chart. What happened to the price? It went up, didn't it? Okay. Now, when it's above this top line, that's when it's when you should sell, basically.
Right. Okay.
Okay. So these are indicators. You don't really need to know the maths behind it. It's good to know. So, for example, here, can you see it's above that top end line?
Yeah. Yeah.
So you can see here on the chart, and then what happens to the price? It takes a big dip, but remember, it's not always guaranteed. They're just what we call indicators. But the higher it is above the line, the more probability it has of going down. So can you see here, it's really above and the price dips.
Right, okay.
And let's try and find another bottom. Can you see here, it's not really below the line. You want it below the line because that's generally a good indicator. But, okay, here, okay, it goes slightly up and it flattens out. So it's not probably the best. You can see here, can you see? Big dip below the line and it just pops straight back up.
Yeah.
So normally you'd buy then once you've made enough money, you'd sell it.
Yeah. Okay.
So that is one. Now there's hundreds of indicators. So we can put another indicator on. This is called the EMA. So what the EMA is basically like a moving average. So what you want to do, you want to buy it when it's below the average.
Right. And
because what they do, it'll always revert back to the average. The price always goes back to that line. So this is on a 14-day moving average, I think, the EMA. So can you see, when it goes below the average, it always goes back to the average. When it goes above the average, the price always goes back to the average.
So it kind of fluctuates around.
Yeah, it fluctuates. And as I said, these aren't guaranteed. So you'll use a vast array of these indicators to help you trade and figure out probability. So personally, for me, I use something called Bollinger Bands. And I'll show you how that looks like.
So they're all, would you say some are better indicators than the others? They're all based on like what, algorithms, mathematical analysis?
They're based on they're based on maths.
Okay.
Some are based on like magic, if you like Fibonacci trends and stuff. They basically follow the Fibonacci numbers. I don't know if you know about Fibonacci numbers. They say everything in the world, universe, they follow the Fibonacci sequence. So some people do that, but what ends up happening, it becomes a self-fulfilling prophecy. So because so many people believe it, then people start following those trends.
Okay. And then then it shows, I suppose, yeah, in the trades.
So this is the Bollinger Bands. Now, I said none of it's really guaranteed. So normally on the Bollinger Band, when it goes above the top line, and this is the yellow line is your moving average, by the way.
Okay.
The top, it's basically based on standard deviation. So your yellow line is your moving average. What this indicator tells you is basically when it goes above that top line, that's when you want to sell. Like for example here, you want to sell when it comes back down. And when it goes below this bottom line, you want to buy.
Right, okay.
Okay, and you can see it's gone below, then it shoots back up. So all of this is to help you. Can you see here? This is a good one. You see, it's gone below this bottom line of the Bollinger Band, that light blue one.
Yeah.
Then it pops back up, and it goes along the moving average.
Okay. So you've got a few indicators to
Yeah,
kind of work
exactly.
out.
And even here one, so here it goes, pops right above the top line, and it comes back down, but then it breaks out. So it's not always guaranteed. None of the indicators are guaranteed. This is a good one as well. Can you see? Goes below, pops back up, goes above that, pops back down, but then sort of stabilizes.
I see.
So Bollinger Bands is one of my favorites to use, but once you get more involved in trading, you'll figure out which one you like using and which one is like most useful to you.
I suppose it's which one you find easier to follow as well, I suppose. But they're all indicators based on some mathematical analysis then, yeah?
Yeah.
Okay.
Right, and our trade, I mean, we're still there, so we can leave that one on, hopefully, and we can look at others to trade. So you can trade individual stocks. So if there's a stock that you believe in, so let's say Facebook, they've released, I don't know if you've heard the new thing called Threads.
Yeah.
Yeah, so...
It's just very similar to Twitter, isn't it?
Yeah, some stocks move on news as well. So if you open up the chart, go to, let's do 1 day. So you can see here, if I zoom in, the Threads news obviously is sort of increase the share price. I think went 1% today, then it's starting to sort of stay around that range. So if you really believe in Facebook and you think it's going to do well, you can start trading that as well.
So when you say believe in it, it's not just a case of you like it. You've got to base, if you're trading, you can't just be like, I like this company. There's going to be a bit more to it that you think if you're going to put your money into it.
Yeah, there is.
So what do you think about when you go, right, I think this company is going to do well?
So there's two ways to be a trader. You can look at the financials of the company, how much profit it's making, how much loss, how much debt it has. So you can do it that way. Or the other way you can do it is just go on technicals, go on these analysis and just stick to that.
Right, okay.
I do a bit of both. I move in between both fundamental analysis and technical analysis. So fundamentals, you look at the profit and loss statement. You look at what the company is doing for the future, how it's, improving the business. Whereas technical, you just look at the charts, ignore everything else, basically.
I think scientifically, that makes more sense doing both of them. But it means you have to really research the company.
It does.
You're putting your money into, don't you?
And look, we're in 39 pence profit now. So you're right. It'll fluctuate. But as I said, if we leave it a couple of minutes and see how it is.
Okay.
As I said, it depends on what type of trader you want to be. So there is a value of just doing the technicals, which you ignore all the other news, all the other shit, so you're not influenced by anything. So you just purely go on the price movement.
But I suppose to make a sounder judgment on it, it's probably good to use both. I think what you do is probably, well, you tell me, does it work out better using both?
Sometimes I get too influenced by the news.
Really?
So I in future, basically, I want to just stick to the technicals. By the way, we were just up £8. It's gone back down to 7. So when it goes back up, I think you're probably right about this, the price going up.
Got a good nose for this then, haven't I?
Now, another thing you can do, instead of watching it all day, like, look, if 39 pence, you can do a take profit. So we can do a take profit at its current 34,235. How much profit do you think is what price do you think is gonna go up to?
From what, 34,577 from there?
Yeah.
I don't know. I'd say 35.
I don't think it's going to go to $35,000 in 1 day. We can set it to 34,240.
Okay.
So that'll get you £18 profit.
So this is basically you're automating it.
Automate it. So
right, okay.
If we press confirm, so if it gets to that price, then we should be in the money.
Okay, so if it gets that price, it'll automatically sell. All right. So in theory, if you had a few of these, you have to watch them. You could put money into certain things.
Yeah.
Wherever you feel like you've researched well enough, and then you can have like a fail-safe. So
Yeah.
if it gets to this, sell.
Yeah.
So I imagine there's the same with the flip side.
Yeah, there is. So if I open this up again,
If it gets to a certain thing, can you do automated buy as
yeah,
well?
look, you're up £12 by there. I think we might hit our take profit. You can do a stop loss, so the minimum amount it can loss. So if we do 34,240, 235, so that will take us out at 39 pence loss.
So basically, if it gets to that,
If it gets to that, you make 39 pence loss, so it's almost guaranteed. And if it gets to 34,240, you're out.
okay.
So look, if we confirm £12, do you want to close or do you want to later on?
Later on.
Later on, okay. Let's see if it hits our stop loss
Yeah.
of we lose 39 pence in the trade.
Okay.
Okay, so we lost. All right, it's a little bit more than 39. It's 78 pence we've lost because it quickly went down.
Oh, right. Okay.
And the reason is because sometimes if the price moves too quickly, there's a little bit of a gap.
Okay.
But it will take you out around that value.
Okay, close enough.
Yeah.
Okay, so that's pretty good. So you can invest in different stuff. Set these. What was it called when you set these?
Stop loss and take profit.
Stop loss, take profit. So
Yeah.
you can invest in a few different places.
Yeah.
You can set some of those, and then you can kind of let it run, can't you?
Yep, 100%.
I like it. Okay.
And as I said, you can do gold as well. So if we look at gold,
Because truthfully, I don't see myself watching it.
no, I said at first,
You've really got to have a lot of time on your hands for that.
Yeah, definitely. So this is gold. If you believe in gold and you think it's going to go up in price. So again, let's go to the candlestick. This is a 5-minute chart. So let's see how it's doing in the last few days. So you can see gold is slowly starting to come back down.
Okay.
And with gold,
Don't they say gold's good to put money in for the long run?
it is, but remember, this is trading. So this is not investing in gold. You're just
Okay.
trading. You're trying to make
Yeah.
money off the price difference, either it going up or
Yeah.
going down.
Okay. It's not, you're not in it for the long game.
No,
You're making money on the
your movement of price.
Yeah, I see. So are there any key things that are good for that? Like are precious things like gold good for that kind of thing, or is it currencies, or is it just a mixture?
You can do anything. We can look at currencies. The good thing currencies is pretty much 24/7. So
okay.
whereas stocks, you'll have a open and close time. So for example, that US 30 that we're looking at,
Yeah.
and this is a Friday today. So there'll be when the US stock market closes, obviously you can't trade.
Right.
So look, you can see it closes in 3 hours 37 minutes. Whereas currencies is pretty much 24/7 you can trade.
Okay. And is there any times specifically that is good to trade if it's
I said, as a trader, that's what you have to figure out. So it might be in the morning, it might be very volatile.
right?
In the evening, it might not be so much. It depends on the stock, depends on commodity. So if you look at currencies,
Is that something you have to just gauge from?
so
don't want to use too many indicators.
you don't want to use too many indicators. So you chosen and opted for the RSI. So you can see it's broken out the top part. It's gone down. So that's your indicator. You want an EMA on there?
Yeah, go on.
Your moving average.
Yeah, go on.
So let's more popular EMA. So if you zoom in a little bit, by the way, this is only the 5-minute one. You can see it's slightly above the average. Okay. And if we go to 1 hour time frame, it's very high above the average.
So this would be a good time then, yeah, to
Buy or sell. Because your RSI is telling you to sell because it's above the top line. It's very far away from the moving average. Sell. Okay.
Yeah.
So this is GBP USD. GBP USD.
Bro, you better type quicker, man. We're gonna lose fucking money, man.
All right. So 100. Yeah, let's put 100. Let's put 200,000. Right. Sell. So you're betting on it going down.
Yeah.
Okay.
Yeah.
Do you want to put in the take profit point already or leave it?
Leave it for now. Let's just
leave it for now. Let's
see where this goes.
Okay.
See how it fluctuates. Bro, this is pretty exciting. This,
Yeah.
I'll see.
So you're already in a minus 17 loss. Do you know why that is?
No.
Because of the spread. Remember the difference in the buy and the sell.
Oh, right.
Okay. Because that difference is basically what your broker's going to make.
I see. Okay. But it looks like it's coming down.
Yeah, you might be right. So remember, this is a 5-minute chart. What chart do you want to look at? 5 minute, 1 hour?
No, I think 5 minutes. All right. Change it. Let's look at the 1 hour. We can come back to this, can't we?
It's gonna be a long podcast. So this is a 1 hour, and I think obviously if you're trading 1 hour, so you're trading hourly,
Yeah.
which is 5 minutes is a bit too quick for me personally.
Yeah.
Unless you're on this all the time, or you got some sort of
Yeah.
algorithm that you're using, your own algorithm. So we've got, on the hour, it looks like it's going to come down. It'll probably do something similar to this, I reckon.
Right.
And remember, this is based on probability. You only need to be right 51% of the time to start making money.
Mhm.
In trading, you'll always make losses, and you need to manage your risks. So the way you manage your risk is by putting stop losses in,
Yeah.
because that's the maximum you can lose.
Yeah, I suppose that's a fail-safe, isn't it? So
Yeah.
you don't lose too much. So should we put something on this then?
What's that?
The stop loss.
Yeah, we can do. So that's a very good plan, because you want to manage your risks. So what you want to do is, ideally as a beginner, you want to use a 2-to-1 ratio. So for 2-to-1 ratio means for every loss you take. So if we put a loss as £100, the maximum, or the amount you want to make, the minimum amount you want to make is £200.
Okay. All
Yeah,
right.
because
Yeah.
over time, if you keep doing that and using a 2-to-1 ratio, so you double your profit and half your losses each time, you'll always be winning after enough trades.
Right, get you.
So
Okay. 2 to
stop
1.
loss. So obviously you can calculate that. Normally you'd put your plan in place. I mean, we might hit it. So let's put 1.28, £100, and your take profit. If you think it's going to get to the average, which is what? 1.279.
Yeah.
1.27929.
Yeah.
So what we can do,
So you could leave a few of these running.
yeah, you can put on more than one trade.
Yeah.
1.279, did we say?
Yeah.
All right, so if it does get to 1.279, you're going to make basic £788 profit.
I like it.
So confirm, let's leave it on. All right, then let's say, I don't know, let's trade the FTSE 100.
That's the top 100 companies?
In the UK, yeah,
In the
good.
UK, yeah.
I don't know why they name it like this. UK 100, they call it. All right, UK, I think is doing a bit shit. What do you think? Let's open the chart.
That's for the...
Okay.
Okay, it seems to be... Well, I would say it's looking like it might be moving on the incline on the way up.
Yeah.
Yeah?
Yeah, I think so as well. So are we buying this?
Go on then, yeah. It seems to
Okay.
dip below, yeah, go on.
Yeah. So UK 100 we're buying. Let's do 5. Confirm buy.
Okay.
Okay, and obviously why you minus 850? What? Why?
Oh, why am I minus 850? Because it's not dipped. It hasn't come down.
No, but it's a difference in the buy and sell, isn't it? That's the profit that the broker's making.
Ah,
Let me open it up again. You see, there's a slight difference there in the buy and sell.
Right.
That's 7,279. That's 7,281. So it's a couple of quid difference.
Yeah.
That is what the broker's making.
Ah, okay.
So
okay.
that's why they want you to trade a lot, because they'll always make that money guaranteed no matter
Every
what.
time we hit a trade, they're making like a few quid here
A
and
couple
there.
of quid, yeah.
Okay. All right.
So I think you might be right on this. So if we go to the sort of 5 minute, zoom in a little bit. So it looks like it's going to break out from this.
Yeah.
So do you want to put stop loss, take profit on it?
Yeah, go on then. Let's do a stop loss.
Okay. Stop loss. Now, currently we're just doing £100, aren't we? So if it's £100, and obviously you can use tools and calculators to calculate this much easily.
Yeah, let's get our trends on there so we can see
Yeah.
see how it's doing. Do you find generally, is there a pattern with volatility or things that are better to put your money in compared to like the UK FTSE, the Dow Jones?
As a trader, let's just set this for now. As a trader, it depends what type of trader you want to be. You can set it to anything. You can trade anything. You can either go by the indicators. So if I was looking at this, and because I do a bit more long term, there's something else that you can see it always moves in waves. Okay. Now, what can happen is you can do a few more analysis, like a support resistance. So for example, when I look at the trend, I can see around this price, the price that we bought, you can see every time it hit that price, what does it do? It shoots up.
Back up, yeah.
So this is what we call a support line. So around that line there that I've just drawn on, that seems to be about where it sort of is currently underneath it. It sort of bounces back off from.
So we could be right then.
Yes, and you can see it reaches a peak about here. So this is a resistance line. This is a resistance where it hits and goes back down. Because with the stock market and trading, it's a zero-sum game. So what that means is someone's winning, someone's losing. It's always the case.
Okay. So support resistance line then, yeah?
Yeah, support resistance.
Okay.
So that's another tool you can use. And this seems like it's gonna break out, to be honest. We might make some money on this.
Let's back on some of the indicators as well.
Yeah, all right. So and I said you can research a bit more into the indicators and what they show, relative strength index. So that takes the average price for the last like 14 or 20 days. You can set that amount and play around with that. And prices tend to always go back to its average price.
Okay. So I suppose you're relying on mathematical stuff that people...
Yeah, exactly. So you can see here it's underneath the RSI and it's sort of just peaked it. So if we go on one of my favorites, Bollinger Bands.
Why are they your favorite? Is it because it's got a few trend lines on there?
For me, it's always worked for me, to be honest. Not always, but most of the time. So Bollinger Bands, personally, if it was me, I would have bought when it would hit this line here. Here, when it's gone just below and it goes back up.
Where can we see where we've bought? Does it show on the...
Yeah, so this little green dash line, that's our position line. So it's close to it.
Okay.
This is our stop loss.
Okay.
We can change that if we want. And this is our take profit. So when it gets up here, we want to take some profit.
Okay. So as a guide or some instructions for someone who's starting out on this, would you recommend to put some money, not just in the companies that you like, but would you recommend putting a bit of trading with a variety of stuff, with currencies, with different stuff like the US, Dow Jones? Would you think just try a bit of all of them, or would you say stick to currencies, play around with a few of them, figure that out, then go on to stocks?
Yeah, as I said, play around with everything. Okay. So play around with whatever you want. Just get used to using indicators, and as you get better, you'll start looking at more things like Elliott waves, and there's so many other indicators that you can use. Fibonacci sequences, support, resistance, all that sort of wedges, triangles. There's all sorts of things, patterns. Now these patterns always occur over and over again.
Right.
So as I said, you just want the probability to go 51% in your favor to make money.
Okay. So to start out, you reckon demo account, get the 10 grand and start playing around with various different stuff that you put.
Yeah, definitely. And just get used to trading, how it works. And can you see, I think we might be going into profit. If we leave it on the end of the day, I'm certain we'll go into profit.
Okay. That's good. That's not bad for a first time. Yeah. Made the right call on that, do you know what I mean? I like it. You're welcome.
But you can see it's easy to make money, but it's also easy to lose money if you don't manage your risk.
Yeah, I like the idea of the stop loss thing. I think that's something I'll definitely do because I'd like to manage the risk as best as possible. Yeah. And so I think what I would do is get the demo account and put money into a bunch of stuff, but just set the stop losses. And you know what? You can just leave it.
Yeah.
Truthfully, you can just check a couple of times a day or something, couldn't you?
Literally. And obviously you can put notifications in. And you know that Dow Jones that we've been looking at, I think we may be right because look, it's peaking down and we'll soon be in profit. But obviously we want to get to down here. So obviously we've only left it on for this podcast. if we leave it on couple of more hours, I'm pretty sure it will get into the profit region because it's almost there anyway.
Yeah.
And obviously the FTSE as well. If we leave it on for a couple of hours, we can see what happens. And by the time I've edited this, I'll put the actual prices on.
Yeah, sounds good.
And see what happens. So currently we're on break even for the GBP USD.
Nice. Is there anywhere else you'd recommend putting you or trading with? Anything that you think that works quite well that you've...
As I said, anything that's volatile, once you start getting used to the volatility and start trading those assets, the next thing you can move into certain stocks. I'll do individual stocks that I know very well. So for example, I'll trade Netflix. I started trading Netflix at $200. Now it's over $400 because I look at the fundamental and the technical analysis. I look at both sides, and I'm a swing trader. So what a swing trader...
Bro, you swing. You too.
Why, you want to join me? So a swing trader is basically... let me get rid of this. So
this is more trading than I thought.
Yep, we're on £20 profit.
Ah, sick.
So
Nice.
overall £4.
Nice
Result. We're making money, bro.
I like it.
So what a swing trader is, I'll do it over like a couple of weeks. So I'll look at the dip here.
It's a long swing party, bro. See if I can get that much time.
I'll sort you out some pills. So basically, I'll try and find these dips. I might not get it exactly right at the bottom, but I'll get it somewhere roughly there, and I'll try and ride the wave up.
Okay.
So I sell here or sell up here.
Right.
So I'll try and do that each time the swing. So here, remember this is over a couple of days, so this is over a week. I would have bought here and sold somewhere near the top.
Okay, so swing trading can be every day, like a couple of every few days, or just like when it's going up or down.
Yeah,
following the waves, just buying, selling. Is that what?
Yeah,
Okay.
It depends on your personality and what type of trader you want to do. You can be a daily trader. Like currently, we're doing daily trades. Look, well, it was up £18.
Yeah.
And, you can make 10, 15, 20 pounds every couple of minutes if you want.
Yeah.
But that's quite intense and quite taxing. Or you can leave it on a couple of hours. So you can put a couple of trades in the morning that you think are going to work and leave it for the day and put your stop loss and your take profits in. Or what you can do is you can play a longer term. So you can look at the days and leave the trades in. But one thing to bear in mind, there is interest they charge on leaving it overnight. There's overnight fees.
Oh.
But it's not much. It's a couple of pence. It depends on how much you buy in and what you're doing with it. So the way you can see that is, if we go back to Apple, and it's called short position overnight interest. So if you've gone short, they're going to charge you 0.048 per stock that you bought.
Ah, okay.
Yeah. And so, for example, if you bought 100 shares of Apple, 0.04, I just round it, that's going to cost you $4 overnight for 100 shares to keep overnight.
Okay.
Okay. The long interest, so if you bought it 0.19 times 100, that's going to cost you $19, 100 shares of Apple.
It still adds up,
It does add up. So
if you've got a few trades going on.
Yeah. So it depends on how much you're trading with. And obviously how much money that obviously you're willing to make.
Yeah.
I'm willing to bet on.
So I suppose if you're trading over the short period of time, like your 5-minute windows, it's going to take up more time. But I guess, do you think it's easier to predict which way the markets are going to go in a short period of time compared to if you're doing it over a longer period of time and doing like swing trading? Or does it vary?
It varies and depends on the type of person you are. So like, people that doing it, some people do it every 1 minute, some people do it every 10 seconds.
No, really?
So look at this 1 minute, moves in waves. So someone would have bought there 3-4 minutes, they would have made some money.
But how much would they be making, truthfully?
Well, we can, depends on how much you're trading with. So how much did we buy? We bought UK 100. So let's open up this. So for the UK 100, we bought 5. Okay, let's do over 1 hour, so across the day. So and look at it that way, because we don't really have much time. All right. So someone bought it here, let's say.
Yeah.
Okay. 7,235. 7,235. Okay. And we are playing with 5 shares, right?
Mm-hmm.
And it's got to 7,279. So minus 7,279. 44 times by 5, £220 you could have made in a day.
Oh, you know what?
And that's literally not even one day to win it. That's 1, 2, 3, 4, 5, 6, 7, 8, 9 in 10 hours.
Yeah, that's not bad, you know. That's not bad. So if you kept on it, yeah. And then this is £200 on this particular, on US FTSE, yeah?
No, this was, UK 100.
UK 100, yeah? So it's 200 quid here, and if you've got a few of these going, shit, you can make a couple hundred quid a day easily.
I think the UK 100 is going in profit. Remember, we were an £18 profit. So if we took that profit and take this profit that looks like is going to happen.
Yeah.
Looks like it's going to break out from the top. Then obviously you can make, like in this trade, if we closed it when we were supposed to close and watching it, we could have made about 30 quid. Damn,
man. That'd pay for like half a meal.
Half a meal?
Half a steak.
Where are you going?
We could have got a steak dinner for one. That's decent actually. I like it. Okay. Yeah, I think I got the hang of that actually. That's pretty decent.
Yeah, let's leave this on and see in a couple of hours, see what happens.
Yeah, okay. I guess the more complicated stuff's to come then, isn't it?
Yeah, there is a lot to learn.
I want to learn about the wedges and shit like that.
Yeah, the wedgies.
The wedges.
So there is a lot to learn, and I've actually got a course coming out in summer.
Oh yeah.
Where it covers A to Z, everything, and even all these indicators, in-depth explanation of all that. Right. So it takes you, and the course is made for someone like yourself, very beginner, complete novice to it. And it takes you in a structured way from A to Z. It's over about 100 lessons and you just have to follow it through. You'll learn everything that you need to know about trading.
Well, bring it out early enough in the summer so at least I can spend the summer doing a bit of trading.
Yeah, definitely.
So instead of wasting time just pissing about, playing computer games.
Yeah. We'll cut that bit out.
Sorted.
Right, cool.
All right. Nice one.